Over to you.
Thank you again, President, and it's good to have an opportunity to have a first exchange of views on this important file, and I want to welcome indeed other shadows rapporteurs who could join us here today, and some of the discussions I've had have been very useful, and I appreciate them for having those discussions, and we'll have further discussions with those who I haven't met. But as you rightly say, this is an initial discussion. As colleagues will be aware, President, we circulated 2 weeks ago a working document which really sets out what is the detail of this file. I hope explains it in simple language exactly what is proposed within IORPS 2 and sets out as well the background to this particular file. So I hope colleagues will have found that working document of some use. As I said earlier, it was suggested at the time that this particular file, IORPS 2, would not actually progress. And I know there was a consideration by the Juncker's Commission Better Regulation agenda as to whether or not this file would actually proceed. Yet the Commission have pressed on with the file, and as colleagues will be aware, the Council came to an agreement in December of last year under the Italian presidency on the general approach to this particular file. So we have a proposal, we have a general approach which has been obtained by the Council, which is useful from the perspective of understanding at least two of the institutions within the European Union. What I hope to do today is really to go through what an IORP is, to make some remarks, if I may, on the general pension landscape in Europe, because it's a very big issue, but I think sometimes the huge issue of pensions, while IORPS is a part of that, there's a much wider debate that needs to be held on the pensions area. Also to set out what exactly has changed and the reason why the Commission have proposed these changes in light of the fact that the first IORP directive was in 2003, and also to make some reflections myself as to where we are and how we are proposing to approach this. So obviously an IORP is an occupational pension fund, and these are institutions which manage collective retirement schemes for employers in order to provide retirement benefits for their employees. And within general pension policy, they fit within what we call Pillar 2. Pillar 1 is the contributory, in some countries it's described as the old age pension or the senior pension. It's a contributory pension scheme. It's the basic pension, that's regarded as Pension 1. Pension 2 are occupational pension schemes, and then Pillar 3 are non-compulsory private pension savings by individuals. So that's, broadly speaking, the pension landscape that we have within the three pillars. But IORPS is most certainly within Pillar 2. We reckon that there's about 125,000 IORPS operating within the European Union. Some of them are very, very big, across different professional groups, across large companies. Some of them are very, very small indeed, less than 100 members. So this is an impact on schemes that are big and small, but there are many, many thousands of very, very small schemes, and we've set that out within the working document that we've published. It's interesting that they hold assets worth about 2.5 trillion on behalf of 75,000 million Europeans, which represents, I think, about 20% of the EU's working age population. And as of June 2012, unfortunately, only 84 IORPS were actually provided on a cross-border basis. So the great majority of IORPS that are in place are situated in a smallish number of countries, but they're situated not on a cross-border basis. And I think that's something we need to reflect upon. In terms of the current pension landscape in Europe, I don't need to tell colleagues about what an important issue this is for the European Union because of the demographic change within Europe. The old age dependency ratio is projected to double from 26% to just over 53% within the European Union within 2060. It's been broadly accepted that if at the moment there are 4 people working across the European Union for every one pensioner, it's anticipated that within 40 years, if this current projection continues, that we will have, broadly speaking, 2 people working for every one pensioner there. So these are enormous issues that we've got to grapple with especially within Member States, how we provide for this huge pension liability windfall which has to be addressed by individual Member States. Principally, however, this has been within the responsibility of Member States in terms of Pillar 1 and Pillar 2 and Pillar 3. Member States have direct responsibility for improving pension schemes. Some Member States have done an awful lot in this area. Others have done less so because of their age group, because of the economic circumstances they found themselves in. But I think it is accepted that the IORP directive can play a role in terms of achieving larger potential use of, for occupational pensions and making sure that we have efficiency gains within occupational pensions. So why has the Commission amended this directive, President? Well, the first IORP directive was, as I said, brought forward and accepted in 2003, and it focused on enabling occupational pension funds to benefit from the principle of free movement of capital and free provision of services. One of the essential aims of the directive was to enable more cross-border activity by IORPs, yet Member States have implemented this provision in different ways, and thus most IORPs still work on a national basis. I think I've already said that in terms of the very small number of cross-border IORPs that are in place. Now, the Commission sees a number of reasons why the directive should be amended, and I think it's good housekeeping from any parliament. I mean, I was in the Irish Parliament for 18 years, and I regularly dealt with legislation that was a consolidation piece of legislation based on historical legislation. So it's good general parliamentary housekeeping that we would review existing legislation that is there and bring it up to speed and modernise it and make it fit for purpose. I think the Commission's proposal, firstly, they see the prudential barriers still obviously remain in place for cross-border take-ups of IORPs. They recognise that there has been a great shift away from what we call defined benefit pension schemes to defined contribution schemes, and this is just a reality of recent changes to pension provision across the European Union. And the Commission considers that scheme members need to obviously receive essential information in a comprehensive way. I said recently at a forum that, outside of buying your house, if you choose to buy a house, the next biggest decision you have is where you work, and more importantly, if there is pension cover from that work. So, as we look at the European labour market, this is a very, very important issue as to where people decide to move to, what jobs to take on, whether there is a pension attached to it, whether there isn't. So these are all issues that it is crucially important that people will be aware of basic information and to have that information in terms of the governance and the transparency requirements that are within pension cover. So, as I said, the Council agreement has made significant changes to the Commission's original text, primarily around the question of pension benefit statements, cross-border transfers of IORPs and delegated acts. And I want to say this, colleagues, that I'm minded by the fact that in what was quite a controversial and I think it's fair to say a very sensitive file for a small number of Member States, the fact that the Council have come with this general approach, have come to an agreement under the Italian presidency, is something that I think we have to have due regard for, given the fact that this is such a sensitive issue for a small number of Member States. So, in conclusion, what approach am I taking in this? First and foremost, I want to recognise that this is essentially a matter for individual Member States in terms of pension policy. It will be utterly wrong, in my view, to apply some kind of one-size-fits-all approach to this, or to try to proceed on that basis. We need to understand, recognise the fact that pension cover in Europe is very much dependent on a Member State by Member State perspective. I also think it's very important to recognise the fact that historically, in some Member States, there has been a very strong allegiance between employers and employees and their representatives, kind of a social obligation to provide pensions for workers and to make sure that those workers are well covered for and protected for. It's actually quite a European dimension that we have these pension schemes in place, and it's something that I know that trade unions and employers groups are very strong about, that this is not just some financial instrument here. This is ultimately a social provision in terms of providing for people in their retirement. Secondly, I would say that this is obviously has a much bigger impact in a small number of countries. But even in those countries which have low exposures to IORPS, this will still have some impact. We should recognise the trend in labour mobility. About 3.5% of Europe's labour force currently move around the European Union to work. That's about 8 million EU citizens, if we're being totally honest about that. Given the demographic changes within member states, it's logical that more and more Europeans will move to get work. And part of their decision in moving to get work may well be whether or not they have adequate pension cover as they go across the European Union to pick up this cover. So, yes, we need to recognise the fact this is a small number of countries involved, but we should also recognise the fact, for competitiveness purposes, for mobility purposes, the European labour force of the future will and is changing. And I think providing for inter-country IORPS is something that is going to be logical if we're trying to encourage people to move, to take up the job opportunities that are there in various member states. Thirdly, one of the key objectives, in my view, should be trying to improve the internal market when it comes to IORPS without cutting across member states' provision that they have historically put in place and without over-regulating this and over-administering a system. And what I think it's fair to say as well, I welcome the decision by the Commission not to copy not to copy the insurance-like solvency rules within the IORP directive. This could have been very damaging indeed. I think it is the case that after the crash we have gone through, pension schemes, a lot of work has gone on within the pensions industry and within governments to make sure that these schemes are solvent, that they actually can yield a proper benefit for workers when they retire. And I think applying the insurance solvency rules would have been a mistake. So I welcome the fact that the Commission has agreed on foot of the Council recommendation that we would not go down this particular road. Fourthly, I think it's important to say that communication is important. Workers are entitled to know what the schemes are in place. They are entitled to know what the likely yield will be in terms of their pension into the future, and that their questions are adequately dealt with and responded. We've seen some terrific examples in some countries, the Dutch especially, which give a really good model of giving information to people and making sure that information is there. And we should use these models as examples to other countries without mandating it on member states that they have to apply these particular aspects of information. So that's my general approach. We'll be having, if it is accepted by the committee and by the coordinators, I'm proposing that we should have a public hearing, and I think it's likely that we will have this sometime in May. I have a very open approach to this file. I want to hear from shadows and indeed from colleagues in the committee about how we can improve this. But my general approach would be to go at this in a cautionary way, given the fact that pension cover is so important and a small number of countries have already put in place a very strong, robust system of pension cover